NVIDIA CEO announced he'll stop selling NVIDIA shares. Could this lead to a continued all-time high for the stock? Palantir has officially joined the S&P 500. Chinese stocks like BABA and JD are up over 6% following a stimulus boost from the government. And post-Fed rate decision, 7 of the 10 largest banks globally are starting to cut interest rates. The upper weekly target is still standing strong at 5820. But the real question is, can we get there? Absolutely, but not without trapping a few more bears along the way, just like today. Stay sharp, guys, because the market loves to shake things up before making its move. Hello, I'm Alex. Welcome to Present X Future, where we dive deep into real-time market context and strategies focused on current price action. In each episode, we break down what's happening in the markets right now, using both current and historical data alongside technical analysis to build context and a narrative for our next trade. Whether you're here for key plays, indicators, strategies, or just a deeper understanding of today's price action, this is the place to add more value to your trading strategy. Alright, first, let's take a step back and look at the bigger picture. After hitting all-time highs in July, the market dropped 10.38%. That's about 600 points. It found a bottom at the 200-day moving average, bouncing off a key support level. Then came one of the strongest rallies we've ever seen. 16 straight days of gains followed by a 14-day consolidation phase. But what's really important here, this rally wasn't random. It was reacting to major support, and the consolidation gave us a clue of what was to come next. We'll dive into why that consolidation was key in a moment. Next, we saw the second major pullback of the year, which retraced about 50% of the move from the low of the August consolidation to highs. After that, a sharp 4-day sell-off unfolded. But here's the catch. The sell-off didn't stick. The market quickly reversed, forming a classic V-shaped recovery, bringing us right back to that same consolidation area. But why was this V-shaped recovery so significant? We'll explore how it led to the next breakout in just a bit. For 2 days, the market toyed with traders, showing what looked like selling pressure. But all eyes were on the FOMC. When the 25 basis point cut finally dropped, everything changed. A huge overnight rally took place, and despite manipulation at the open, the market pushed higher, breaking into all-time highs. But what's even more fascinating is we hit these all-time highs during a period of negative seasonality. Historically, this time of the year is weaker for markets. So why are we still climbing? Stick around and we'll break that down in a moment. So now, let's focus on the present. For the past 2 days, overnight price action has been much cleaner than what we've seen during the New York cash session. After Monday's brutal chop in a tight range, SPY futures targeted our second target at 5792 and slowly came back down to support around 5752 area. We can clearly see that a bear trap was laid out down there. At the open, the market sold off from 5785 to 5755 during the first trading hour, trapping bears once again. And just like that, ES and NQ, with the help of NVIDIA, just pulled off a V-shaped recovery intraday. But what happens next? Will the market hold this recovery and continue upward? The morning session made the biggest move with a 40-point range, and then started to consolidate between 5790 and 5782. We also saw what looked like a stop hunt at around 2:30 p.m. Eastern Time, when the market had a liquidation breakdown to 5774, only to recover back to 5784, which is today's balance area, in just minutes. So the question remains, will we break above this consolidation zone, or are we just setting up for another shakeout? In the final hour, the market consolidated above 5784, and we're still looking towards upper targets at 5792, 5797.50, which is the previous all-time high, and 5807. We closed at the day at 5793, giving us a 10-point run in the closing minutes, but still within the supply zone. I'm targeting 5807, and remember, our weekly expected move is still 5820, so that's still in play. We're not overextended or overbought by any means. Even consolidation periods can lower RSI significantly. It's also worth noting that while ES futures didn't hit all-time highs today, the SPY ETF did. So the big question is, Will the 5807 target be reached in the next session, or could we finally see the 5820 level get tested? BABA had an amazing move today, driven by the recent China stimulus news. If you're not already on this train, don't chase it. Chasing here could burn you, whether through options premium decay or getting caught in a trap setup near 97.19, which is a major resistance level. The first scenario here is to wait for a clean break above 97.19 and a retest, because between 97.19 and 106.13 there is a weak structure. This means that the price can move quickly in these ranges. The second scenario involves three areas of potential buying opportunities: 93.42, 91.78, and 85.41, all strong levels with Fibonacci support. However, if we break below 85.41, all bets are off. The market could chop for days or even drop towards the next support level at 79.85. Now, with this rapid movement potential, the key question is, will BABA break cleanly above 97.19, or are we just setting up for a trap at these higher levels? Tesla had a big day as well, breaking above and closing right at major resistance. The ideal play here is to wait for a pullback to 233.59 and enter long. But as we all know, the market rarely makes it that easy. Another play is to watch closely for a break above 254.27, which is the current resistance. If that clears, you can go long with a tight stop and target upper levels at 265.10, 278.58, and 300.03. But here's the question. Will we see the pullback to 233.59 for an easier entry, or will Tesla break above 254.27 and continue higher? Now let's talk about the star of the show, NVDA. Big news today, as the CEO announced that he will not stop selling shares, which sparked even more buying in. We saw a beautiful setup forming with the 115.60 level holding. Right now, NVIDIA is on the verge of breaking out of a trendline resistance from its all-time highs, and this could fill the volume imbalance at 124.60. But remember, major trendlines can often act as liquidity grab areas, which could lead to a trap. The best way to play the setup is to take profits quickly and let your runners run. So the big question is, will NVIDIA break through the trendline resistance and continue higher, or are we looking for a potential trap? So far, we've seen better ranges overnight, but the market still provided some excellent opportunities during regular trading hours today. Remember, staying patient and sticking to your plan is key. Don't get caught chasing, and always manage your risk. I hope this breakdown helped you sharpen your strategy for the coming sessions. If you found value in today's video, hit that like button, subscribe, and share your thoughts in the comments below. Let's keep learning and growing together as traders. Now I'll leave you with some words from Paul Tudor Jones. The secret to being successful from a trading perspective is to have an indefatigable and undying thirst for information and knowledge.